So as a base case, I still expect it to have a pretty good 2021 because until it breaks over there, it's at risk of further corrections and consolidations. I warned in my research service back on November 22nd that it's probably due for a near-term correction, but once it punches over 20,000 firmly into new all-time highs, the ceiling above that where it can go is rather high. And
there's a very large percentage of Bitcoin that is basically just off the market. It's just in cold storage, and you need to pretty much pry it out of their hands with higher prices. So I watch things like, are coins going to or from exchanges on average? Are long-term holders selling, or are they holding? So most of the indicators I'm tracking look to be somewhat mid-cycle in terms of the bull market. And so it's less of a kind of a slam dunk in my view than it was back in say spring of 2020 and summer of 2020, where you could buy it for 7,000, you could buy it for 9,000, you could buy it for 10, 12,000. So that in my view was a kind of a very asymmetric play. Now that you're well over 50,000, in my view, it's somewhat less asymmetric, where your probability of getting 10x gains in the next year is less than it was back then, and your downside is somewhat greater.
So as a base case, I still expect it to have a pretty good 2021. I warned in my research service back on November 22nd that it's probably due for a near-term correction just because it was rather overbought and came very far really quickly. I started to see a lot of euphoria, and we've kind of had that consolidation, that correction. And so I'm watching the $20,000 level very closely because until it breaks over there, it's at risk of further corrections and consolidations. But once it punches over 20,000 firmly into new all-time highs, the ceiling above that where it can go is rather high. And so I don't know if that's going to happen next week or 2 to 3 months from now. But as long as it kind of does that over the next several months, then I think the bull market's intact.
Bitcoin is a bubble. Okay, I can see where this is coming from. I mean, it technically was a bubble in 2017. Is it still in one now?
No, for the most part, no. And part of the answer to that question is zooming out. And so it's like a bubble in the near term, especially if you're looking at the linear charts. You see this thing go from near zero, and then it skyrockets all the way up to 20,000, then collapses, and it looks like a bubble. And that was actually, again, my concern back in late 2017 when I initially covered it. I was like, this came really far, really fast. There's lots of euphoria. But if you zoom out and you look at the logarithmic chart, you can actually see that Bitcoin's following a very rhythmic pattern ever since inception. It tends to have these big blow-off tops every 4 years, and then it corrects, and then it consolidates, and then it eventually shoots up to another high. And so actually, when you zoom out, that 2017 high didn't look any different than its high from 4 years before that or 4 years before that. But that's the one that really kind of captured media attention, and that's the latest one. So if you look at the linear chart, the other ones pretty much disappear. So I would advise people to look at the logarithmic chart in terms of kind of developing their long-term, whatever technical trends they might be looking at. Yeah, so this is something I struggled with a little bit in 2017, and that's because we were seeing dilution. So we were seeing other coins capture some of the market share, and we were seeing splits within Bitcoin itself. And so I was interested in the space, but I avoided investing in late 2017, which ended up in hindsight being a good decision because it had that kind of multi-year consolidation and high volatility. Now, over those couple of years, though, we've kind of answered that question. So Bitcoin's network effect is very strong, and that's what really separates it from just about any other coin. And so, anyone can technically copy it. If Bitcoin's open source, you can copy it, you can run it. It's kind of like how you can copy Wikipedia, and you could run it. The problem is getting traffic to whatever you're doing, and sort of a community. And so with Bitcoin, you have over 10,000 nodes around the world running it, and some estimates are far higher because not all of them are visible. And so that can't be replicated just by copying the code. It's really about all the software that's designed to work with that particular protocol, as well as the developer community and the company ecosystem around it. So hardware support for it, security solutions, exchanges that accept it. And so that one particular protocol has developed such a strong network effect relative to all the other coins, and that's why over the past decade, 5,000 coins haven't been able to really take a lot of market share from Bitcoin. Yeah, so this gets back to the network effect thing. So if you were to fork Bitcoin, for example, you can't fork the whole tens of thousands of nodes. And so that's why actually, if you look at the number of nodes that those forks have, Bitcoin Cash or some of the other derivatives, they have a much smaller number of nodes than the core Bitcoin protocol, and that's because they were unsuccessful at forking the community, even though they could fork the open source software. And so it really comes down to any sort of threat that can fork the community and fork the nodes should be taken seriously. But so far, all those attempts haven't really been able to take market share.
Yeah.
And that's why, as a market cap percentage, those forks did not really retain their value relative to core Bitcoin. So the most bullish version there is that you basically have, this big influx of corporate buyers and other institutional buyers locking up coins in cold storage that are probably not going to move for a while. The more kind of a neutral, interpretation of that is that because of the rise of things like stable coins, especially in this cycle, Bitcoin's less used as a unit of account for trading different crypto pairs. And so it's more of an asset in its own right. And so you can, bulls and bears can kind of interpret that in different ways. But overall, that's certainly an interesting sign because we're not seeing coins go to exchanges like we often see towards the end of a bull cycle. I try not to have aggressive scenarios as my base case. And so my base case basically is that as Bitcoin goes from near at zero and as it becomes a larger and larger asset class, that each post-halving bull run will be a smaller percent gain than the one before it.
Another argument that I've heard recently in the last couple of months is that as Bitcoin rallied, capital flowed away from gold into Bitcoin. That's part of the reasons why gold was down. Now, my issue with that argument is that if you look at the size comparisons between Bitcoin and gold is a $9 trillion market, whereas Bitcoin is hovering around 200 billion to 350 billion, depending on the price of that day. So they're not really comparable in terms of market sizes. Do you think that the sizes of flows into Bitcoin are substantial enough to drive gold down?
Probably not alone, but around the margins. And so the way pricing works, of course, it's always the marginal buyer and seller that really kind of sets the prices. And so most gold's not moving, and it's really about that liquid portion of gold that is trading hands. And so, I don't think it's Bitcoin alone that stole its thunder. I think it's Bitcoin. It's, they're kind of a recovery in some of the other natural resources we've seen, like energy, copper. And so we had kind of a really strong period for a lot of those other things. And Bitcoin, went pretty much vertical during that, kind of November period before it had this kind of recent correction. And so I think it's more of a combination of multiple of these outperforming assets that might have led to gold's kind of temporarily decoupling from real rates. So I like both. I own both. So I think that in 2021, probably Bitcoin has more upside potential. And so for investors that can manage their position sizes appropriately, I think Bitcoin offers a lot of opportunity over that specific time frame. But I like gold. I like Bitcoin. I like silver. And I like some of the other industrial commodities as well. So I like to have a degree of diversification so that if any one thing's not working out like I expect, the overall basket still does well.